let's maybe step forward to the point where Anthropic and OpenAI have gone public. Hopefully they've returned some capital to the market. What do you see the market looking like in 27, 28?
I think we're about to witness a big evolution in the private market. Again, I think people have tasted what the private market is and are paying attention to it today in a way that they haven't been before. And I think that the wealth channel starts moving in as well. As we're talking to some
Okay.
wealth managers, the interesting thing is, it used to be 60-40 stocks bonds. And over the last 5 to 10 years, it's evolved into 10% alts. Well, they're starting to realize that, more and more need to be allocated to alts. So I don't think it's all going to come into venture secondaries. I think there's real estate. I think there's private equity. I think there's
Right.
infrastructure, but there is a venture sleeve. And I think all of that just grows. And so what we talked about before is I think that there would be less stock picking and trying to find the winners. And I think it's going to be an allocation to the space via managers. I think what we've seen over the last year, the rich are getting richer, right? The mega funds are getting bigger. They're allowing more access, and people for the first time who have always tried to get into these funds are now able to get into these funds because they're raising more dollars. And I think that, again, that's part of a strategy. But when you're looking at the private markets, you don't want just one strategy. And I think that's the evolution that we're seeing is you're going to want to have some of those funds. Those funds are going to take 15 to 20 years to pay out. Some maybe a little bit less. You might get 100x, but you're also going to want access to other parts of the market. So I don't think we're going to see one strategy. As more dollars come into the private markets, I think it's going to populate a lot more opportunities for all the participants. And then we'll see who's
Yeah.
good and who's not, right? There's going to be some that are going to sink and some that will flourish. And I think that it's just time will tell.
I think, both OpenAI and Anthropic are great companies. Whether they're great stocks at the prices that they're being priced at is maybe a question. Um, I'm really more interested in what happens after those three high flyers, become public companies and where the rest of the private market shakes out. I think there are definitely some great companies out there. Databricks, Stripe, in particular. We're investors in Anduril. Also, we're holders of Canva. There's some really good companies that I hope will go public in the next 2 years, and we'll see how those play out. It seems like the expectations for public companies have just been set so high recently. I think normally great companies are maybe fearful of going out in the current market, and being compared to those three companies. But I do feel like we'll see more reasonable valuations for the stock market, I think, with the next, 10, 20 companies that are going public. Maybe not so much of those three.
Right now, it seems like it's a bit of a popularity contest. What are the household names?
Yes.
And beyond that, can the public markets support some of these other companies? And, with the household names, what we're seeing right now with crazy valuations is it's a lot more, I think Scott Galloway says this a lot,
Mhm.
but, is it numbers or is it narrative? And I think we're seeing a lot more narrative than numbers, but some of these
A
smaller
lot more,
ones,
a
but
lot
some of
more
these smaller
narrative.
ones truly have to be numbers.
Yeah.
And if the numbers win out for these smaller ones, I think the window opens a little bit more.
Yeah.
If it's strictly just a narrative game in a popularity contest, the IPO window is gonna continue to be narrow, I think.
Well, I think a lot of our investment thesis for what we call secret stallions, and it sounds like, sort of same thing for some of your Law of 30 or Law of 50. These are companies that we really are looking at, revenue growth margins, what's the preferred stack of capital, reasonable multiple valuation based on, future cash flows. It's kind of boring and it's kind of Buffett style,
Yeah.
management, investment management. But I think there's only so many narrative stories that the market can support. And maybe even those narrative stories aren't supported forever.
Yeah, you call them
Yep.
stallions, we call them thoroughbreds. These are because, unicorns are kind of these mythical creatures, and the question is, are they really truly worth $1 billion? But stallions and thoroughbreds have kind of proven themselves, right? And
Right.
so, that's what we're looking for, these companies that are gonna withstand the test of time.
Well, Sean, thanks for spending some time with us. Really appreciate the insights. I guess for folks who want to take a look at early asset and secondary OS, you guys will do, I guess, on the spot valuations for folks, is assuming they fit the criteria for the companies you guys are looking for, right?
Yeah, it's all conditional based on the information that we have. But if you're looking for liquidity, then we do a little bit deeper dive. So we may have to adjust the price based on what we figure out. But yeah, we do our best to get you a good indication of price for the assets that you hold in the private markets.